Okay, let's begin. All right, so this is going to be a quick call, like a catch-up call, just to take a look at higher time frames because we have options expiry coming up this week. Third Friday of every month, if you're not aware, is options expiry. So most times the volatility that comes in between Wednesday and Friday of the third week is very, very heavy. After that, this particular month, options expiry, it's not just a monthly expiry or monthly expiration, it's also a quarterly expiration, which means elevated risk, elevated volatility, and the potential for very large days is here. This particular week, this is my favorite week to trade because of that. So the last time we did a call, apart from the study video, would have been when we talked about higher time frame for the month going into September. Typically, we see a lot of month expansion. Yes, that's correct. So now we're just going to recap what we wanted to see, what we're expecting, how's it playing out, and where do we think the next likely draw on liquidity is. So starting with DXY, here's 110, institutional big figure number. We did sweep it, which is fine. Not everyone puts stops or targets exactly at big figure. You allow for some amount of spike through to clear the board, just like NAS. Or when we were expecting 13.5 for NAS, it did a little sweep above 13.5 and then it crashed. So we swept to 110. Between this high right here, let me put a line there as well. Between that high right here and all of this run up right here, this is institutional accumulation. What does that mean? It means above this high and into the big figure, there's a whole lot of interest to do business. It can be logically breakout buy stops expecting DXY to push 110 and continue going higher. It can be sell stops, not sell stops, sell limits from persons looking to go short when DXY purges that high. Or it could be take profits from the guys who are holding DXY longs since forever. All of that just suggests that there is interest from a large majority of the trading world, for lack of a better word, to do business at or above this price. So when we were here, and I was suggesting we're very likely to see accumulation inside here, that's because I was expecting a whole lot of back and forth wiki price action inside here as they sweep in or grab the guys trying to go long and sweep out the guys trying to go short. So big spikes come back, big spikes come back. All of that I was expecting above here. But because this area was imbalanced, it made sense when I was doing the analysis for them to liquidity imbalance, just to make it look random and weird and frustrate a whole lot of persons who got in early. Early buyers get frustrated, they cut. Short sellers get frustrated, they leave, and then that happens. But all of this here is accumulation. Now, my question would have been, or my question is, we account for seasonal tendencies pre-October. We can do another call about seasonal tendencies, and I'll tell you how I view it. Whole at a higher time frame. I'll dedicate a call to a higher time frame one of these days, maybe on the weekend. Okay, so if we know or we accept from the things that we've been talking about recently that that high right there is liquidity. Just mute everyone. pull this line over. Where is your order block? Which one of these candles here would you expect to be your order block? That one. 6th of September. That's the 6th of September. Yes, I think so. Let me check. This right here. This is your order block. This is what I would view as an order block, right? So just in case somebody who says, oh, that's not an order block. No. This is what I interpret as an order block. This is what I use for my model. This is what I manage risk around. So if your model gives you a better entry, great. So this is the order block I'm looking at. So let's draw some attention to that candle. All right. Oh, I forgot to put that on. Let me grab one of these boxes and clone them. There's the XY. There's the order block. So that's a candle I'll be looking at for an order block. Deviate from the range, not always the highest. No. Order blocks is not necessarily the last candle before an impulse move, or not necessarily the highest one. There are conditions that the highest or the last candle must meet to qualify as an order block. This candle meets that criteria. So this here means nothing to me. If we retrace higher inside this, the fact that we have imbalances inside this blue box here means that DXY retracement can come all the way back up here before continuing low, because there's gaps in delivery inside the order block. And that right there is a gem. So if we start retracing, watch that. But as of right now, this low is what I'm looking for DXY to trade to. That's a target for me. If we get here and start closing below this, then I'm thinking lower DXY. This quarter generally the last quarter of the month going into January, we have very bullish DXY. So if this is setting up to sweep liquidity for another push higher, then that's fine. But that would have been the narrative. The narrative of this structure right here is bullish, right? The narrative is bullish. The order flow is bullish. The context in the market right now is retracement. So the market is retreating. So if you've looked at the core content ICT placed on YouTube, retracements seek ... Right. How do we differentiate? Wait, how do we, when to use last candle for swing or previous, like you said? Where was the liquidity before the up candle was formed? And where is the candle that closed above the liquidity if you're bearish? This is the one. I keep it mechanical. I keep my rules very mechanical. I'm not going to skip around between multiple candles. If I see them, I'm looking at where's the candle that closed, and I frame my trade around that like this. Then if I need to refine, I drop to a lower time frame and I refine. This refinement comes in the form of this imbalance right here. So no further refinement needed, just identify where the imbalance is. So lower DXY. Jump to NAS. NAS 12,000. I think I also mentioned that I didn't identify any arrays below here because I don't think it needs to go below here. Or even if it's going to go below here, the fact that this has been an extensive move downwards, it needs a retracement. The most likely place it's going to retrace to has to be a daily high. This is the daily high after we broke here, which is why I left that on. So let's pull that out in time. That daily high is an imbalance. So again, retracement seek ... think we're done on the drop for NAS now. I'm looking for 15,250. I also want to see 15,000. I really want to see 15,000 NAS. Now, if NAS is bullish, right? Let's assume that NAS is bullish. Oversold RSI. You got it. You got it. If NAS is bullish, where's our order block? Where's our bullish order block? Well, where was the liquidity? The liquidity was below here. This low. This was also a down candle that pushed higher, broke market structure, which means above that high, that's an imbalance. We talked about this quite a few times. Quite a few times I introduced this model. So if we have the order block here, and then we have a low above it, housing liquidity, we drop down here. There are two possible candidates that you can use for an order block. This down candle and this down candle. By definition, this one is the one that closes below the liquidity here. By, what do you call that now? Principle. If this is the down candle here, and this came back inside the range, even though we have liquidity right here, this here qualifies as a candle that closes back inside this right here. But might have to explain that more thoroughly another time. So both of these candles are your order block candidates. Now, you want, if you're using either one, it doesn't matter what you use, because, or it doesn't matter what you think is the order block, but what you expect afterwards to validate it is more important, which would be trading above the opening price of this candle to initiate a change in the state of delivery. Choose my words carefully. Don't ever use trading view. Mixed emotions, mixed emotions. So let's move this broken line here. And I'll put it on both candles just for completeness sake. There. Both candles are there. So if you're using this as an order block, you'd have been in from down here. If you're using this as an order block, after this day, you'd be stocking longs in this day. So you may or may not would have gotten in, because it doesn't look like we had any retracement lower or power of 3 idea, right? Not my concept, ICT. So no power of 3 idea here, where you would go into a day with a bullish bias and stock the low of the day to go long. Call that entry on Wednesday. Yeah, not surprised, not surprised, not surprised. What's wrong with my words? Cheeky, cheeky, cheeky. So here we have AU again. We have AU's low right here. Price closed above. The last time we, or before, wait, one sec. One sec. Somehow, somebody always escapes from the mute. Now I have to go study how to use Zoom. Imbalance right here when we traded above that high, which makes this candle here fair value for buying. So if you remember, when all of this was happening, even when this was taking place, I was saying we could get another drop lower at or below this red line. Many, many moons later, we have this. This was the possible order block candidate. But there is no liquidity inside. Well, let me not say that. There is no clear liquidity inside here, but there is liquidity inside that, which is why I highlighted that candle here as your potential order block. So when this here happened, we'd be stocking longs inside this. And again, no power of 3 idea. Any thoughts on oil and silver? I'll try to look at oil and silver in the last 10 minutes of the call. Don't worry. So now this is now a potential order block candidate that we've traded above. I'd like to see a retracement that redelivers price. Notice my choice of words here. Redelivers price between that candle's closing price and this open here. If we sweep this, all good by me as well, and then we trade higher. The best day to do this would be Wednesday. Going into the week, how will I frame what day my setup is going to form? I'm going to look at 2 days of the week, Monday and Tuesday. And then that gives you a 85 to 95% likelihood of what's going to happen for the rest of the week. You guys don't know what I'm talking about. I laugh, you know. GJ. Do I really need to talk about GJ and hurt my feelings? This is what we've been waiting for all day long for quite some time. And then just look at the chart, you can see it. I don't need to talk about it. Highs swept, magic fib, pointing to objective. Not gonna talk about that fib too much, but yeah, you can see GJ, and if you've been following the calls, you know all about what's happening there. All right, let's take a look at gold. So gold, higher time frame, fair value, close below bearish order blocks because there's an imbalance. Then we push low. So this low here, I can move this line, not really doing anything at the moment, to here. I'll pull that over. So we have price trading about below that candle's low right here, which means I don't need to point out, well, I think I don't need to point out where's the imbalance at that low. The candle that closes below is right here. Closing price to the low gets filled in right here. Price trades low. Did we take this candle's low? Nope. Which means this market is in retracement conditions again. Overwhelmingly bearish order flow. Fails to get to the liquidity objective. So this is now a failure swing. Whenever there's a failure swing in the market, the next thing I expect to happen is an opposing liquidity run. An opposing liquidity run should sweep the start of the bearish accumulation. So where did they start accumulating shorts? Here? Or where did the bearish run start? Here? All of this right here. Then we push low. So then we start looking at the leg from that high down to that low. And we look for the days that failed to take previous day's high. After this push here, all of these inside here, all the way down until this one. We didn't take previous day's high, which means these are all liquidity building right here. So if I was, oh, what can I say now? If I was interested in more gold shorts, I'd be looking for that to take place bam. It is probably a strong color. Inside that range. It's inside the up candles that filled the imbalance and then pushed. And there's a daily high resting right there as well. So if you put it just above the daily high to allow for a sweep, that's where I'd be looking. In the chat, how about that FVG, FGV? This one right here, we're already closing above this FVG, and there's no FVG right here. And this right here is interesting because we're already above it on Monday. If we're above this on Monday, then what do you expect Tuesday to do? trade higher. If Tuesday trade takes Monday's high in an underlyingly bearish market, Wednesday creates the high of the week. Yes, Raidu. I hope I didn't butcher your name. Yeah. So right now, it's all, again, the daily chart is all about liquidity. Where's the liquidity building up? Where are we? What are we waiting for? We're waiting for Wednesday. We're waiting for Wednesday to move. So if we're waiting for Wednesday to move, where's the liquidity in the market before Wednesday? Well, it's not yet Wednesday. We can already see daily lows intact. We can already see that we're deep inside this range from that high to that low. We're roughly in premium. And we're seeing a liquidity pool that we believe that price could trade to. So high of the week vibes coming around here on Wednesday. So let's see. Let's see what Tuesday does before we commit. GU. So I think this is 2 daily lows from all the way over to the left. Yeah, 2 daily lows from all the way to the left. GU, same idea. Close below. There's our imbalance. This was the candle that we were looking at for order block candidate when GU was way over there. Admit. So now we have a range of price. So this is when rules will save you more than just looking at the price structure. The rule is the candle that closes below the lows is the order block. Price stopped in here and ranged for a while. See that? So this is when you can use an entire range as accumulation or an order block versus one single candle. Most persons are used to using last up candle and then down move. This is a consolidation before the down move. If accumulation precedes a big move, and we always look at one candle before the big move, isn't this accumulation? Equal lows, all lows, 1730 for gold longs. 1730. Now gold has to come back down for me to be interested in buying. Has to come back down. S&P, pretty much the same as NAS. Don't need to go over that. We have this daily high right here. I think that's what I'm looking for on NAS. NAS just took it. S&P just took it. All of this, I'll say this high. I look for retracement there. Then lower time frame refinements for entry. But as of right now, we wait for Monday and Tuesday. Bearish GU. GU in particular is a no trade pair for me for many reasons. UK's economic condition right now. DXY retracing. It's Monday. All that saying, I wouldn't sell GU. I would not sell GU here. Me personally. Yeah, there's no selling GU here. For me and my model. This looks more interesting from an FX pair standpoint. It's got all the rules that you'd look for. Liquidity. This candle close below. Order block candidate. Even though we have accumulation inside here, perfect. Which makes this, let's grab that line and put it here, which makes that high a failure swing. And if I'm not mistaken, I think I pointed to this when it was happening. So if that's a failure swing, it means this right here is your stop hunt, which means your entry should form inside here. So I would want another down day for this guy. Yeah, that Sunday gap screamed, man. I wasn't expecting that at all. UCAD. We talked about UCAD a couple times before. I don't remember what I talked about, but just looking at the price action, I can see that this would have been ideally where I expect liquidity to be resting because it's a failure swing. This high took liquidity. So why would I expect liquidity to be here? This high, failure swing. Liquidity grabbed, order block, all the things we know and love. This low becomes a draw on liquidity. And I think that's why that X was there. Why we should expect bearish. So I'm bullish EU, right? I'm bullish EU, but being bullish is one thing. Do I see a trade entry here? Nope. I don't want a deeper run for my trade entry. Do I think it needs to get down here? I don't think so, because we have too many back and forth delivery. Wicks up, yeah, too much back and forth delivery here. So I would not pull a fib from that high all the way up here to get an entry. I would dice that range and use the premium portion. Get the premium part of the range and then dice the premium and then reframe discount. There we go. I'm not recommending anything. I'm saying that based on my trade plan, right? You have to trade your plan. You get paid for your decisions. My trade plan suggests that I chill for now. Scalps on lower time frame, perfectly fine, but no, nothing to commit to yet without confirmation. So USD CAD is now here. It's interesting to see where this day closes. So at around lunch, I'll check my daily charts just for data to see if we're closing below here. And then I start anticipating what I would like to see from Tuesday. UJ, everything here is on the chart. I mentioned that everything, I believe that everything above this is stop hunting. Everything above this is stop hunting. So if that's all stop hunting, then it needs to come back inside the range. Where's the range? High, low, little candle here that pushed above it, all of that. So daily chart is suggesting 135 vibes, but this is a daily chart. Without volatility, it's not going to push to 135 in one day. But that gives me a draw. And that draw gives me a bias. Okay. No idea why this pair is here. But the time frame I rely on the most for my model is the hourly chart, right? The hourly chart gives me everything I need to do on a daily basis. Where higher time frames are concerned, at the start of the month, I look at a monthly chart. At the start of the week, I might look at the weekly chart. But apart from that, everything is on a hourly chart. But to kind of help the guys that are, I guess, learning from me, I incorporate daily charts to teach narrative, because I could show you entries and you could find entries and you could find them even better when I point to it. So if I say this chart is bullish, it's easy to find an order block that's bullish and take a trade. But if I help you to understand why the narrative is what it is, you don't need me. Most days I open my group and everybody has the same charts, everybody has the same trades, and it's not like they're sitting down telling each other what to do. And I love that. It means I was able to communicate my understanding. Somebody asked about silver. Control U. It would be in metals folder, I think. But it's actually not. I think that is it. Okay, let's see what silver is offering. Yes, sir. Yes, sir. Okay, take that line off. What do we see here from silver? Now, I've not studied silver or looked at it before, so now I'm going to share, I'm going to think out loud what I'd be looking at when I look at a chart for the first time. The moment you open your eyes and look at the chart, you could see that it's going down. So I want to find the last, and I don't have to do that, I could just push this. I want to find the last time we took a low. Last time we took a low was here. Okay, cool, where's the candle that closed below? This guy. That already is standing out too much, though, darker gray. So there, that's my order block. So I'm looking for, well, let me not say that. Let's use current price action. So now I'm seeing that the order block was created right here. We've price traded above it. Then we have close above it. So we would be bullish essentially once this day closes. The moment we have price traded above the opening price is when you start expecting lower time frame market structure shifts. Before it happens on a time frame like this, you get confirmation on lower time frame. If you trust the lower time frames, then you could hold your position. But if you don't, then you scalp it and you'll be fine. But effective this day, I'd be looking for higher prices. Now, let's take a look at the range that we have here for silver. That high pushed all the way down. This high was broken here. So let's add some lipstick and make our process strictly rule-based. Empty for history. This is the last time, well, not the last time, but just framing out reference points, right? Or key levels. High taken here, which means opening price of this candle is where your order block should be validated. Validated, immediate rebalance, price pushed, all the good stuff, right? Nothing to be too wonky about. This is the last time. I'm gonna put some things. That's the last time we had price pushing higher, which means this right here is institutional mitigation. There you go. So they were cutting positions off right there. What would they be cutting off? The longs, which means whenever that happens and they come back here, you expect this speed, lots of volatility. Liquidity taking. We moved from mitigation to immediate liquidity, and now we're retracing. Retracements seek ... Where is the ... inside this fractal? Right there. So now that we're here, even though the order block is right here, if this guy is indeed bullish, it would be very good if they don't touch this, then drop lower, because when you get that buy entry, you could be very sure that they're going to break through that high and destroy that level. If they touch this before retracement, then it goes back to being anything can happen. It can hit this and then just move lower. But failing to do so and then moving lower gives you a clear upside target. There we go. So my thought for silver, don't trade it today. If I was, this is not financial advice, I'll go as far as to drop to an hourly chart. Can we refine this? All of that is your order block. Look at that. Consecutive down close candles destroying a low. So very random. I was about to say something else, never mind. All right, so from a lower time frame, what do we have that we can work with for taking a trade? Let's go back over to all of this and refine it. Refinement is just putting it on the exact close to not confuse myself. This is the imbalance inside here, overlapping perfectly with another lower time frame imbalance, old high, all the good stuff, relatively equal highs here. So we can see the liquidity, right? Or we can see no and understand it. So this would have been a price swing that took high and low. So adding a fib, roughly about 50% here, would give you your dealing range equilibrium. So we're now in premium. In premium, if buy side was already taken by the range high, you look for your premium arrays. And I'll leave that for you to look at. December doesn't start Q4. That's the end of the quarter. The first quarter of the year, just do, you can back test the first quarter of every year. The XY tends to be bullish. So that's a little seasonal tendency. So because of that, retracement no would set up that, in my opinion. Or even if the market's underlyingly bearish, if we start breaking lows no, then Q4 can, well, not Q4, Q1 can incite some retracement. So yeah, the draw on silver in hindsight, perfect. That would have been our liquidity draw. On a lower time frame, you'd be framing out the opening of this candle right here as where you want to see your market structure shift take place. So real quickly, do I want to do that? Sure, why not? On a lower time frame, this is where you want your market structure shift to take place. It's a higher time frame order block. Right there, opening price. That makes this low to that high your dealing range. Slap a fib on. You want retracements at or below. Where's that line? Let's pull it up. Excel lock I would like to share with you. Tracking open interest. Neat. You know where to find me. 50% of the dealing range is coming in right here. So if you had not been in a trade, or you were just framing based on the model I taught last week, then you'd be thinking, since the dealing range is created here, and we have a market structure shift right here, where are my bullish arrays at or around this red line that I could use to frame a trade setup? I'm going to hint at something that the person who study is going to figure out. Right here to right here frames your order block. Inside your order block, you find your array. And that's what gives you this entry. Market structure shift on a lower time frame again. Same structure. Dealing range back inside here. At or below this, we have high broken, candle that close above the high, extend that out, bam. There's your run. Beautiful, right? Beautiful. Now, this is when you don't expect a deep retracement for many reasons. This run down here, rebalanced, didn't take sell side, which makes this area your point of focus. But it's been a great call. Zoom says I've been talking for too long. There was Matt the Divergent. Not do that. All right, thank you guys for coming out. Enjoy the video, and we'll talk in the group. Have a great day.